Larry, in your book, you have a whole chapter dedicated to commodities and hard asset investing. I feel that there really hasn't been a whole lot of great press around these asset classes over the past maybe 2 generations. How should financial advisors and investors look at investing in commodities and hard assets going forward?
Well, the first thing you do is just look at the top, like 1981, what are the top stocks in the S&P? And, you had some gold miners in the top 20. You had some oil names. Exxon was forever. Exxon was the top market cap company in the S&P. And so you think that one of the things that we talk about in the book is we took 5 million jobs out of the United States and we moved them around the world to emerging markets. And so if you're in India and you're working on a call center, you're making about 50 times more than your great-great-grandparents. And so countries like India are growing at a very, very fast pace relative to the rest of the world. And so the Davos crowd meant well. We've decimated the United States. I mean, there's fathers in the Midwest that are literally addicted to opioids because they're so tragically depressed and decimated by all these jobs leaving the United States. And life expectancy in states like Pennsylvania and New York is coming way down because people are not living longer because of all that stress of losing their livelihoods and having to go from working in a very high-paying job to a very low-paying job. And so we've taken these jobs, we've moved them around the world, so we've increased the standard of living globally. So we're creating a lot of carbon consumers, but we haven't really invested in the infrastructure to support all this new demand. So capital expenditures, if you look at capital expenditures in oil and gas and metals in the 2010 to 2014 period, 2010 to 2014, that was on a trajectory that if we kept that to today, we're essentially in a $3 trillion hole. And what's going to happen is around 25, 26, the demand from energy from around the world relative to the supply of what we've suppressed the supply. That's going to create a pretty nasty energy crisis. And that's what the bottom line is. My point is, over the next 5-10 years, you're going to see a BHP or an Exxon or a Chevron in those top 10, 15 names in the S&P because energy and materials are probably going to go from, say, 7% of the S&P to maybe close to 20%. And so we're not going back to 1980 where industrials, materials, and energy were 49%, but I think we're going back to 30 from 12, and that's where you got to reconstruct your portfolio. Forget about the 2010. Everybody's in the 2010 to 2020 portfolio. Everybody's along the same thing, and it worked for a long time because we had a very, very certain deflationary world, and now we're moving into, even though we're in denial because I talked about that election year, they really want us to believe that lower inflation is sustainable. So there's like that election year brainwashing of the public. Everything's fine. Inflation's coming back to 1-2%, and that's what has everybody so deeply embedded into this 2010 to 2020 portfolio. But once people start to realize that inflation is now at a much higher long-term trajectory, that's where you get much more higher bond prices, higher inflation. That gets you that move from financial assets to hard assets.